Warlow from Business Loan Services, here in the second video of a series looking at answering that oh so important question: what are banks looking for when assessing my finance request? In the first video, we introduced the concept of CAMPARI. It's an acronym which is a credit assessment framework. We looked at the first four elements of that framework being character, ability, margin and purpose. So in the second series now we're going to look at the final components being amount, repayment and insurance. The A in CAMPARI then stands for amount. Yes, when the bank is looking at your business plan, obviously they're going to be focusing on how much do you want to borrow. But it's not just about the figure itself. The key thing the bank is looking for is what you are contributing towards the deal. Banks aren't really interested in lending 100% of project costs. They're looking for a contribution from you. So if you're running a business, you've got money sitting on the account, don't clear, some of that can be used in order to contribute towards the project. It may be that you have personal monies that you're injecting into the business in order to make the project work. So just think about how much money have I got to contribute. The next thing the bank will be looking at is your cash flow forecast and your profit and loss forecast, just to make sure that the amounts tally up. So for example, if you're asking for £100,000, is it clearly reflected in your cash flow forecast? This is just making sure that everything tallies. The last thing on amounts that they're looking for is what you're asking the right amount. Now, many businesses will ask for too much in the knowledge perhaps that the bank may negotiate them down. Not really a good tactic, just ask for what you want. But also the bank's also looking for whether you've under budgeted the amount of money you want. Many business owners think, oh, that sounds a very large sum, let me just scale it back. But of course in scaling it back it may put the project in jeopardy. So just make sure that you're asking for the right amount. Let's move on now to R, which stands for repayment. Here the bank is going to be asking the question, have you demonstrated the ability to repay? So how's the bank going to make themselves feel comfortable that you can afford to pay the finance? Well, it's got a number of tools that it'll be looking at. First of all, your past profit performance. The bank will be looking at your previous audited accounts to make sure that you are making money. They'll also be asking to see your management accounts to make sure that you're still making money since the last financial year. Once the past performance has been proven, the bank will then move on to the forecasts. They'll be looking at your forecasted profit and loss to make sure that you are forecasting profits. But also, we know that profit doesn't equal cash. So they'll also be looking at a cash flow forecast to make sure that you can generate enough cash to meet the repayments on the finance that you're borrowing. But also one important aspect as well is your past repayment track record. They will be going back to see, have you paid previous loans on time, or have you kept within previous overdraft limits? So past performance as well is equally important when the bank is assessing your ability to repay. And here we have the last element of CAMPARI, which is insurance. Now, insurance encapsulates more than just insurance policies, although that is important. It really looks at the issue of security. Whilst at the lower end of the market, banks may be willing to lend to you unsecured, and once you get above £30,000 to £50,000, then most of the banks will want some tangible security to back that up. It may be in the form of land and buildings. If you're able to pledge a building, the bank will take a valuation just to check out the numbers. If you're a limited company, banks will definitely want a personal guarantee from directors and shareholders. Again, it just gives them another party to call upon if the limited company fails. Also, if you are operating as a limited company, the bank will consider taking a debenture. A debenture essentially is a means for the bank to capture stock and debtors and other assets within the business. So for the lower end, security may be less of an issue, but as the amount grows, the bank is going to want to see some security to safeguard its position. Well, here we are at the end of this 2-video series looking at this credit assessment tool, CAMPARI. How can you use it? Well, if you are thinking of applying for finance from the bank, just go through the CAMPARI framework: character, ability, margin, purpose, amount, repayment and insurance, and make sure you cover all of these points off in the business plan, because this is what the bank's going to be looking for. So if you want that all too elusive yes, go through CAMPARI and make sure you tick all those boxes. Hey, if you are looking for finance and you want some help and support, don't forget, just drop us an email, info@businessloanservices.co.uk, and either myself or one of the team will be more than happy to chat through your project plans.